Let's begin by talking about 2009. What a year it was for small caps particularly. I mean, it's not a year you'd have wished on anybody, but for the small cap sector in particular, it was a tough year. But in the long term, and also looking back in history, no surprises, because we do know that the small cap sector lags the broader market.
Yes, I think 2009 was an annus horribilis for many small caps, where on average a market was down by just under half. In that space, certain stocks did have a remarkable recovery towards the last few months of 2009, in many cases more than doubling from the historic lows.
Right.
But again, looking back into history, generally when the market recovers, the institutions go into the blue chips first. When they start looking expensive, they move into the mid-cap stocks. When they start looking expensive, they move down into the smaller caps.
Yeah.
They haven't started doing that yet, and as such, I think that there's still value in the small caps, but the lack of interest from institutions means that low valuation will remain in place for another few months yet.
Indeed. So we must surely say 2010 surely should be the year for small caps, wouldn't we?
I think the answer is yes, but from my perspective, having spent the last week or two running around and seeing dozens of companies, I think that whilst the prospects out there remain quite tough in the overall economy, and certain stocks are doing slightly better than others, I still think it'll be the second half of this year when the broader market starts saying, hey, there's value here, we need to start looking.
But the numbers that are coming out, a bit mixed, but they do appear to be supporting the case that we are seeing a gradual improvement in the economy. I mean, we saw the manufacturing numbers that came in yesterday, and this morning with Shoprite reporting sales up 11.9%, but the like-for-like number looked stronger, closer to double-digit increase. So perhaps there is life in there. So if we do say that, where is the value and where would you go? Let's go within our small cap sector.
I think, as we were talking a little bit earlier before we went on the air, the key thing that I'm looking for in 2010 is M&A activity. It's been very scarce in the market in the last couple of years, particularly in the small to mid caps. What we're seeing right now is many small companies, having been overlooked by the broader market, sitting on vast piles of cash. And I think that cash will be used to grow their underlying business and to take out weaker competitors.
But that's interesting for me, because if you're saying there hasn't been too much M&A activity in the past year, and you're saying it will start coming in this year, but that's as value begins to return, and therefore valuations are beginning to look more expensive again. So why would you want to be taking out your competitors when they're perhaps at the top end of their values? Well,
the values haven't started to recover yet. In the small cap space, the PEs of many of these companies remain in the 3s, 4s and 5s. So let's say, for example, you're a small to mid cap company trading on a similar PE to your competitor. Your competitor is in distress. It has debt issues, it has a weaker balance sheet, it perhaps has an indifferent strategy. If you can take it out using your existing cash balance to grow your business, to remove a competitor and to strengthen your existing footprint, you're going to do it. And I foresee that many companies in the construction, building materials and general infrastructure space will consolidate during the course of this year.
Now you pick up an interesting trend, I think, which if it does take place would suggest lack of confidence on the Altex market. You are saying you're expecting to see more companies migrate from Altex onto the main board of the JSE. Would that be a function of just growth, or would that be a function of people running away from a market where there's lack of liquidity and where we also saw some of the worst returns last year?
I think it's a combination.
Market onto the other side where things were better.
I think it's a combination of both. Currently, mandates have changed at many institutions, where in the old days, when the listings boom happened, they would happily invest in Altex stocks. Now mandates have changed because liquidity has dried up in Altex, and Altex is seen as a pariah of the market. The JSE has done a fantastic job in nurturing a small market, but currently perception and sentiment is not with Altex stocks. So if you're a great little company listed on the Altex market and you're being overlooked by the broader market because you aren't able to invest in that stock due to your mandate, you will migrate to the main board. We saw Esau Frankie doing that very successfully last year, and I think in the first quarter of this year there'll be a few others moving over to the main board, purely because sentiment is not with the Altex market currently.
But investors are not quite logical. People sometimes are in there, because when you think about it, Anglo-American in 1897 was a small cap.
Yes.
So we must invest in small caps.
Well, in theory, the answer is yes. Today's small companies, tomorrow's Anglo-American. It's just identifying which ones there are.
Indeed. Let's talk about 2010. We must talk about 2010. Who is likely within the small cap sector to benefit from the FIFA World Cup in 2010? And do you think the problems that we saw in Angola, the attacks on the Togolese players and that kind of thing, will likely have an impact on our market here, number one, and secondly, also on the returns and profitability of companies that we're likely to see in the second half of the year?
I think 2010, in the companies that I've seen in the last few days, it's going to be an interesting dynamic for many stocks in the consumer, leisure, and the hospitality industry. But the key thing that many companies are telling me is that they believe that the spending that will be coming into this country may not be completely directed in the areas where you expect. So yes, if you're a tourist coming in, you have to fly in to get here. You have to stay here, you have to eat, you want to see the games. If you're a family living locally, you want to see the games, you want to travel, you want to eat. You may not necessarily use your money to go out spending in the retail outlets. So I think that the feeling that I'm getting from the corporates is there will be spending in certain areas of hospitality, in food and in transport. But in terms of general excess spending in retailing, it may be coming short.
Anthony.